Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we have decided to skip the update on the gold market because, as you can see from our daily videos, there's really nothing has changed significantly on the gold. I think that our daily videos on the next week will be enough. It will be sufficient update. So and we don't see any reasons to dedicate the weekly research to the gold market right now. That's why we think that it would be better if we will prepare another weekly research on some currency market. And today we have chosen the New Zealand dollar because one of the reasons is that actually we have here the valid scenario that we're following to, and it hasn't reached yet the final point. That's why we thought that maybe it will be interesting to prepare some update what to expect in the nearest future on New Zealand dollar. So in general, New Zealand dollar situation is difficult as fundamentally as from the geopolitical point of view, because fundamentally it's really big difference in the policy of the National Bank of the New Zealand Central Bank and the Federal Reserve. And as we have right now, we have better insight on what Federal Reserve intends to do compared to what we have in the beginning of the year. As Fed has shed some light on this problem, and this situation mostly stands not in favor of New Zealand dollar. In the geopolitical sphere, actually New Zealand stands in the same Asian Pacific region, and although it stands rather far from the hot point, I mean the North Korea, but still it's closer to overall turmoil rather than any other developed countries. So that's why although it maybe not stands in very close to the process, but still it stands in the Asia Pacific region, and overall tensions that stand in this region also pressed on the New Zealand dollar. So it's tensions that stands in touch with Japan right now. South Korea still will have some impact, I think, that on China as well, and on the New Zealand dollar probably also. Speaking on the dairy product market, it's also not very good situation there. We have discussed this on a couple of weeks ago when we have plotted the chart of the dairy products, and it also shows some weakness on the market. All these moments makes the negative impact on the New Zealand dollars, and you can see our suggestion that we have made when we've got the first trade in the March here. Actually, we have started with this bread and butter sell trade. As soon as it has been completed here, our second target was here, because when we even have a deal with the bread and butter, we said, take a look, we have uncompleted ABCD here, and bread and butter could become the part of the process, and the market will have a tendency right to this target, and sooner or later this target should be hit. And indeed that has happened. When the market has completed the bread and butter trade and started this upward direction, we said, take a look, we could get the butterfly here. And last week this target has been completed. So you can see this was the second target in our scenario. But our major target stands with this large ABC top D pattern. This is not the final point, guys, because we have the analysis of the weekly chart, we have analysis on the monthly chart that have a longer term perspective, but we're speaking right now on the daily. And in the daily setup, this is indeed final point in the short term perspective. And we think that this target will be completed. It stands approximately 100 pips lower than this target. Why we think that it should be hit? So even beyond the factors, and this fundamental and technical, geopolitical that we have talked about already, in the short term perspective, guys, first of all, market has broken major fib support in 69.60 area on the weekly chart. This was right here, and right now it stands at some kind of the free space. So here we have no overbought areas, Market is not at the overbought, not on the weekly chart, not on the daily. We do not have any strong fib levels in this area, so this is relatively free space. This is the first reason. Second reason, take a look. Although market has taken out of these lows for a few pips, market doesn't hurry up to return back above. So this looks not as the wash and rinse process. So market has taken out of these lows, but it has not returned back fastly. So it means that this is not just a stop grabbing process, but this is mostly the real breakout. Finally, what's more important is that take a look at the speed of this dropping. Here and here, this was very fast action. Market shows an acceleration right to the 127 target of the butterfly. In most cases, it leads to reaching of the 1618 after some time. So market probably could show some respect to this support because this is indeed important targets. You take a look, the 1618 has been completed. This is 127 butterfly here. Minor retracement is possible, but as soon as this will complete it, market will drop lower. That's why we think that within the perspective on 1-2 weeks, we could count on reaching of the 67 60 area, approximately completion of this ABCD pattern. So as you understand, the major question for a common week will be watching for upward retracement and how deep this retracement will be. What we could get from the daily chart. On the daily chart, for example, we could measure the harmonic swing here and estimate what really retracement could be. Based on the harmonic swing, we see that retracement could reach approximately 69.70 area. Also, guys, take a look. Another possible point that we could watch for is the support, where this drop has been stopped, approximately 69.35. So two levels that we could see from that chart. Also, guys, if even market will show this deep retracement, 69.70, it will not break overall bearish tendency. This will not be some strategy for a bearish scenario. This retracement will be strong, so deep, but not crucial. Although personally, guys, I think that retracement should be a bit smaller, because as I said, no reasons right now for a really deep retracement here. Only if retracement will be triggered not by the New Zealand dollar, but for example, a weakness of the United States dollar. In this case, indeed, market could show some different action. So on the 4-hour time frame chart, it's not really quite clear picture. So initially, I thought that we could get the double ripple buy or something of that sort. But right now, as you can see, action is a bit blurred, so a bit choppy. Maybe we could get some kind of the double ripple by lookalike or something of that sort, but I'm not sure. So 4-hour time frame chart is not really interesting for us. So more interesting in the hourly chart. On the hourly chart, we see a couple of levels to watch for. First one is the 69 approximately, 3.8 resistance, and next one is the 69.25 conference resistance, weekly and monthly pivot point. So that's will be important level. I prefer to see that retracement will be over on these two levels. That will be very good action corresponding to overall sentiment on the market, overall bearish tendency, and minor retracement here seems logical. But at the same time, as you can see here, we could recognize some kind of the hand shoulders pattern. So for example, this could be left shoulder head. If market will reach 69.25 confluence, this could be starting point of the right shoulder. And in this case, market could show the deeper retracement, probably right to the major 618 resistance approximately. So this will be the major 618 level. That's why we will be watching for first reaching of these levels. If market will reach 69.25, it could really mean that retracement could become stronger if market will form the hand shoulders pattern. So let's keep watching on that, how retracement will develop. For us, since our major direction, we are searching for taking the short position, we do not trade New Zealand dollar right now on the long side, and we will be just watching how retracement will develop. So if we will see the market will reach 69.25, in this case, we should be ready to appearing of the reverse hand and shoulders pattern here and possible deeper retracement, maybe even to the 69.70 area. That's our analysis for New Zealand dollar. If retracement will start to develop in some other manner, so will be choppy and gradual action, we will be watching for that two levels where market really could turn down. So because our major target, as we said, stands at 67.70.